Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion today, we want to say thanks for questions coming from our audience at SmithWeekly, including Yarcy F., Cindy W., Andy J., Luke A., and Ryan S. Back on the program today is Mr. Paul Goranson. Paul is the Chief Executive Officer at enCore Energy. enCore is a United States-focused in situ recovery uranium project developer, soon to be in production. The company has a number of projects underpinned by the Rosita processing facility with satellite projects nearby, the Alta Mesa processing facility and surrounding deposits, all in South Texas. The pipeline of the company also includes final permitting stage project Dewey Burdock in South Dakota, the Gas Hills PFS stage uranium project in Wyoming, as well as Crown Point Hosta Butte project in New Mexico. The company also has an additional processing facility in South Texas at Kingsville Dome. enCore has a number of non-core various stage ISR and conventional projects in its portfolio as well. The company is a uranium portfolio holding at SmithWeekly Research. enCore Energy is listed on the New York Stock Exchange under the symbol EU, as well as on the Toronto Venture Exchange under the symbol EU. Paul, thanks for coming back on the program. Welcome.
Well, thanks for having me back. I appreciate the opportunity to catch up again.
Absolutely, Paul. It's always a pleasure. You're one of my favorite guests. It's great to have you back. Well, first, I just want to say thank you for continuing to deliver on the company's strategy with the recent closing of the Alta Mesa transaction. This team, you, Bill, and the rest of the enCore team, are really one of the few that have been consistently delivering on not just M&A for the sake of it, but real meaningful M&A that leads to sustainable businesses. Which leads me to ask you, Paul, give me your comments on that, but give us a flavor for the first activities that will be taking place at Alta Mesa.
First of all, I just want to say that I appreciate the comments, and we are focused on being in production. So all of our M&A transactions have been focused on what will get us into production, sustain our production, and have a long-term production profile. So you captured it pretty well in your comments. With respect to Alta Mesa, the first thing we're going to do is start installing well field at the facility. The first well field, we call Production Area 7, is fully permitted and licensed, and all we have to do is start installing all the wells and then piping it into the plant. So we're starting that now. We're doing all the basically clearing the brush to prepare the staging areas, and also clearing the first areas. We're going to start doing our development drilling and start casing wells. In addition, we'll also be bring the plant back up to operational conditions. Keep in mind, it had been sitting idle for nearly 10 years. And so we need to do some work, refurbish some pumps, check lines, make sure there's no leaks, no rust, and all that, and make sure all the instrumentation's working. So it's going to take a little bit of time on the plant, but I would say it's not at the scale of what we did at Rosita with respect to the amount of work we have to do, but it's still work that has to be done to get the plant up and running. But the main thing is get the well field done, because you can have the plant ready to go, but without a well field, it sits idle. So the good thing is that Production Area 7 at Alta Mesa has a substantial measured and indicated resource that can easily be piped into existing infrastructure and connected to existing infrastructure to go through the plant. I'm really excited to be back at Alta Mesa because, as has been well identified, I've been associated with that project for quite some time. From the day we broke ground on it all the way until 2010 when I left to go work for Cameco. It's been a project that I've always known about, and I believe it has been kind of not always remembered as its potential because it was always operated by a private company. But I think that for bringing it into enCore, it was a major lift for us to get that to happen, but it's going to pay off in the future and really good results, both from a resource basis, but also from a production basis too.
Paul, that sounds great, and I'm excited to see what happens next year with this. And I know the whole project, the folks related to the project, your past experience with the project, all of this is coming together really well and really good hands. I think all parties are very happy with the hands that this is now in, and with you leading things on the ground. It's going to be a nice setup moving forward here, and this will be one heck of a cornerstone foundation, if you will, for the company. Maybe just talk a little bit here, and we'll move on, about the exploration potential here. I think this is something that is kind of under highlighted, Paul. And as someone might say, give me X dollars and I'll show you X pounds that are real good economic pounds to come into the plant. But just talk about the exploration potential here, because my understanding is it has quite a bit of potential.
It does, and that's one of the reasons why it's always been on my radar as being an acquisition target. Because not only does it have near-term production and real near-term production with proven results, it has this exploration potential. And I know we like to say we're not an exploration company because this isn't really greenfields exploration. It's more brownfield at this point. It's that situation that, we've got estimated just over 20 million pounds of measured, indicated, and inferred resources combined. The bulk of that is in inferred resources, and that's primarily on this area that's away from the plant area. So we call that Mestana Grande, or there's various names we use for it, but it's all covered in our NI 43-101 report for the project. But the real thing is that there's 16 million pounds roughly in inferred resources. Most of that is on what we call the Mestana Grande area. Prior to 2006, there were 0 pounds attributed to that, and the private company, Mustang Uranium, spent about $5 million and basically drilled up that 16 million pounds of inferred resources. And what we found at Alta Mesa is that because it's such a large mineral property, we aren't limited by property lines. We can follow the trends until either they leave the property, and that's allowed us to see things like a 52-mile long set of stacked roll fronts in what's called the Oakville Sandstone, which as a known historic uranium producer. In fact, our Upper Spring Creek project, some 90 miles north of Alta Mesa project area, is in the same target sand, and it's a known producer there too as well. We have that long-term potential there, and the beauty of it is I don't have to worry about going and leasing more land, because all we need to do is begin to increase the density of drilling, not only to firm up the inferred resources to measured or indicated, or both, but also what we've seen is that with more drilling, we pick up additional inferred resources. So what gets exciting about it is that once we start drilling into these exploration areas, that we'll start to see a firming of not only the quality of the resources, but also likely adding resources. A good reason for my stating that, and it's just based on historic performance. When I started developing Alta Mesa in 2005, when we broke ground on the plant, equivalent to measured, and it was all historical resources at that time, but would have been equivalent in density for measured and indicated resources, roughly 3.6 million pounds. Well, in that same area, after operating from 2006 through 2013, 4.9 million pounds are produced out of that area, which originally assessed only have 3.6 million pounds in it. And that's because the reality is that once you find an ore body, there's going to be more ore bodies. The old saying is, best place to find oil is in the middle of an oil field. What we find is that best place to find uranium is right next to an existing uranium production area. So that's what we were able to do. And I just believe there's a tremendous amount of more opportunity out there that gets exciting when I think about the long-term potential operating life that we get out of this project and this acquisition.
Yeah, I'm excited to see this advance forward, Paul. And there's a lot of work that can be done out there. There's a lot of money that could be put into the ground. And quite frankly, some pretty dang good results could come out of this. So excited to see this go, and excited to have you come back and wipe off just a little bit of dust that accumulated on Alta Mesa just before you left it before back over at Energy Fuels. So good on you for working on this. And I think it's a great transaction for all the parties that have been involved here. And I know folks are really happy to see you back there. You guys just completed a NYSE Amex listing. Congratulations on that. And you also, on the back of that listing, took that opportunity to raise some capital. Talk about the listing importance, Paul, as well as your thoughts on the need for continued equity financings after the 2 immediate production centers come online and you're into cash flow.
First of all, the NYSE Amex listing is very important to us to get onto a senior exchange. There's several reasons why, but the main one I would say is that is you get more institutional buying from it by that listing. It's easier to get shareholders have an easier time acquiring shares, particularly in the U.S. I can use my experience personally is that while we were on the OTC, I had to basically get my financial advisor to use an act of Congress almost to acquire shares on it. But now it's a no-brainer. But it gives us much more liquidity, it gives shareholders more access to our stock, provides a better mechanism to take advantage of what we see as its next uranium cycle. And I'll say that we did successfully conclude two financings, principally to acquire the Alta Mesa project and then have sustaining capital following that. Our current capital needs gets Rosita into production and gets Alta Mesa into production as well in early 2024, heading towards a 1 million pound per year production rate at that point. As to whether we're needing further financing, et cetera, I will tell you this is that we'll have sales coming off of Rosita to get cash flow, and obviously higher uranium prices will help us obviate the need for additional equity financing. And if we did need financing, we looked real hard at debt last time. We'll look at debt again to see if the conditions are better than they are today. As you know, interest rates are pretty high. Also, one of the other things I've learned, in addition to what we talked about with the NYSE listing, is that once we're in production, we basically change how we're viewed by the markets and everything else. So we see that as a key timing factor for us to hit on all cylinders going forward. But like I said, right now we have the capital raised to be able to continue to put Rosita into production, as well as get Alta Mesa up and into production at a 1 million pound per year rate.
Very well. Yeah, I think it's a timing thing. What transactions come down the pipeline over the next couple of years? What's the timing of how quickly you want to develop some of these pipeline projects? So there's a lot of factors that'll come into raising capital. Valuation, that's another one. So lots of different things here. So I completely get it. And the cash flow part's going to be very, very good for the business because so many juniors, if you will, just don't have that. And so very excited actually seeing that get done. And it's such a milestone in itself to get out of that capital consuming stage and get into this, hey, we're actually making profits here. So very good and appreciate the efforts on that. With respect to the Uranium Reserve Award, well done on that, by the way. Great pricing, great setup, good little volume there as well. Do you think the company will respond again if the program is able to seek new proposals, say this year or in 2024?
We definitely will consider responding. Obviously, everything will depend on our inventory capability and everything, where our inventories are. But definitely, if there's a similar opportunity, we'll definitely look into it. And everything depends on the structure of the contract. Say whether you're dealing with spot sales or anything else on a normal basis, you're dealing with a broad market. When it comes to the U.S. government buying, just because of the restrictions on where they can source it and whether it has to be unobligated for peaceful uses, et cetera, sets that purchasing aside from the rest of the general market and really narrows the focus down on who the eligible sellers are. And so obviously we were able to leverage that contracting structure to leverage into a higher sales price for what we were providing. And we feel really good about the results we had. And if there's another opportunity, we're definitely going to make a run. Hopefully not everybody else will copy our success. We'll be able to be the ones that receive the highest price again. Even though we didn't get the largest award, I'm very happy with what we got.
Yeah, great. And hopefully they tweak the solicitation documents a bit there and make it based on actual new production and some other features that we'd like to see eventually come into this, Paul.
Yeah.
How about Rosita here? A big focus. A lot of work's been completed so far. Well, last year and also this year now. Give us a rough update on Rosita restart work and also just a rough schedule that you see at this point towards commercial production.
I'll answer the last question first, and I'll tell you how we're going to get there. So on the last question, we're targeting for a third quarter 2023 startup, and that could be the early part of third quarter. And so timing is everything, but also there's a few milestones we have to accomplish, which we're well on the way to completing already. The first one being is the construction of the satellite ion exchange plant. We expect to start, we've just completed the engineering design on the pad, and we'll start installing the pad sometime next month. It is February 27th today for the record. So sometime in early March, we'll start breaking ground to place the pad. and then start putting the vessels on it relatively quick. That's a 2 to 3 month process. The other thing is wrapping up the wellfield installation. We have 20 more days worth of drilling and well completions to do. I think that's actually down to probably closer to 16 days as of this week. So we'll get that wrapped up. They've already started putting in the electrical infrastructure into the well field. So we expect all the electrical infrastructure to get done by early April and then start laying in the pipeline. So conceivably, we'll have everything put in place by mid-year. And we do have a couple of, one state review that has to be done. It's part of the existing permit. It's just we did an amendment to add some monitor wells to the production area, which is a minor amendment, and we expect to get that all done well before the midpoint of this year. But everything is pointing towards that mid-year time frame, third quarter, mid-year.
Very well. Appreciate the update on that, and keep up the good work there. Let's move to Dewey Burdock for a moment. Paul, how about an update on where we are here, final permitting, state permitting? Just give us a bit of a pathway here. I know there's some question marks, but give us a bit of pathway here on where Dewey Burdock is and where you see this slotting in.
Yeah, well, we still have it in our target to start development and putting into production, hopefully in by 2025. Of course, it's all contingent on the current permitting process. Just so we're clear with your listeners, is that we have our nuclear regulatory source material license. We have our EPA permits in place. They are being challenged. So the current challenge is against the NRC license, which is the primary lead agency for the environmental impact statement. And that's been carried all the way through the DC Court of Appeals, principally on tribal consultation grounds. And basically the court refused to hear it. Not only did they turn it away on a 3-judge panel, they refused to hear it on en banc review, which means the entire DC Circuit panel. The interveners have the opportunity to appeal to the Supreme Court. There's a whole process that's got a different name than just an appeal, but I'm not a lawyer, so they have roughly, I think, another 45 days to provide their argument why the Supreme Court should hear it. Keep in mind is that every case that gets moved beyond the courts, the Court of Appeals process to the Supreme Court, less than 1% of them actually make it to where the court will hear it. It's got to be something major and significant and something new. Well, back in 2012, the court already ruled on similar contentions on another uranium case out of New Mexico. And one of the court justices was a judge on the DC Circuit Court, Judge Gorsuch, and one of the other justices, the newest justice on the Supreme Court, was also one of the judges on a 3-judge panel at the DC Circuit that ruled against the interveners. So we think the odds are pretty solid that the court's not going to pick it up. And what does that mean? What's the next step? Well, that means the EPA process starts, because it's all been held in abeyance until the NRC process is done. And there's a very good reason for that, is that when the EPA did their environmental impact statement, they tiered it off of the NRC EIS process. So they were not the lead agency. The NRC was the lead agency, and they relied on the NRC's environmental work and their tribal consultations and everything to make their decisions for their process. And just so if we're worried about politics, all the EPA decisions were done during President Obama's term. So the process will start there. There's an Environmental Appeals Board and an 8th Circuit Court on the aquifer exemption that has to go through, but we expect to prevail as we've prevailed everywhere else. And we still have a couple of state permits to do. And the reality is the state of South Dakota got burned pretty hard by the Keystone XL pipeline and the arbitrary ways the federal government canceled that pipeline. And so what they've asked us to do is hold off from advancing the permit until after the federal process is done. We still expect that to be done in the next 18 to 24 months. I feel confident that we'll have a lot of certainty well before that end of that period. In the meantime, we're starting to do some engineering work, pre-planning. If we get the decision to be able to move forward, we don't want to be waiting to make decisions to start development. We want to be able to put something together so we have a plan to start with. something much more detailed than, say, the PEA we have right now. But at least to allow us to start the engineering, get the engineering work done now before we start considering breaking ground on anything.
Yeah, it'd be great to see in this particular case with the federal approvals going in the right direction. It'd be nice to see just the state will piggyback on the federal approvals at this point. Probably no reason not to expect that. Sounds good. I appreciate the update on that. And yeah, what a process and patience required. And of course, the work on the legal side. Good to see this move along. And maybe the timing works out really well to where we have already 2 production centers doing excellent work to help cash flow this next pipeline piece. With that, speaking of pipeline, how do you see the Gas Hills project fitting into this, Paul? Do you think it's something that can be fast tracked to be ahead of Dewey, or maybe it's in parallel to Dewey? Talk a little bit about Gas Hills.
So right now we're doing it in parallel to Dewey. I won't mince words that it's not permitted to the level Dewey is. The difference between Gas Hills and Dewey Burdock is that currently it is not being challenged, and so we've got a pretty straightforward pathway with the state of Wyoming. We do have to do an EIS on it because a significant portion of the property is on federal surface, and so we have to follow the BLM process on that. But the one thing that works in our favor is that literally on the fence line, on the east and south fence line of our property, is Cameco's Gas Hills project, who went through a full-blown EIS back in 2011, 12, and 13, and had a really solid finding of no significant impact. And so I think that although we may have to do a EIS, we're going to be able to tier and use the information. Drove the Cameco one to support our permitting work. So we're doing the groundwork. We're getting contracts now for wildlife consultants and getting out there and taking soil samples. We have to do that for a minimum of a year before we can submit anything for consideration by the state of Wyoming. So we're starting to do that work right now. And we intend to do a little bit of drilling out there in the Gas Hills to get some confirmation cores on to test for leachability and recovery to verify and validate through the PEA. It's looking pretty exciting, and we're starting to work on it. And there's a whole lot of balls in the air, but I got a lot of very good people leading these various different initiatives within our team.
This is a good project to have here and be working on, and great state, and be great to see you guys get into Wyoming. Just remind me, there was an existing PEA on the project, so technically it wouldn't necessarily be PFS stage. So you guys are going to redo the PEA, Paul, before you move to PFS, or what's kind of the thinking there?
Haven't thought that far in advance at all right
Okay.
now, Andrew. It's we definitely want, we'll right now we haven't seen a need to update the PEA at Gas Hills because it's relatively new. It may not have caught a lot of the inflation factors, but at least from a economics and from a using it to build out a our plan, it's still there. It's still considered reasonably valid. We would like to
Okay.
go back and look at the Dewey Burdock PEA and redo it under current cost conditions. It's still going to look very good, but it makes it easier to align with our South Texas operations. So when people are considering Dewey Burdock in South Texas, they're seeing, and maybe some of our competition, they're getting more of an apples to apples consideration rather than two different, basically snapshots in time that may or may not be valid in the current economic environment. I would
Right.
say that my expectations where the market goes is that all the PEA is going to hold up the test, even if we do go put in higher cost, because the market's changed and we're seeing that we're confident that we're going to see better price environments for uranium, which is going to really help us being able to finance these projects through cash flow.
Absolutely. I think that will hold up really well, and the market conditions will definitely give us that. I think it's just a question of when here, not if. And then also, yeah, the confidence level in these projects, certainly Gas Hills, could go to feasibility or pre-feasibility stage here.
Mm-hmm.
And I think that sounds good to continue to progress these and show the market what these can still do, even in the light of higher costs. Some of those won't change and they won't go down, as you know, but this market conditions with respect to the uranium price and where we are there, very conducive to some pretty good economic results, is my suspicion. Another topic that came out here, recent news, another term deal that was announced. Talk about the current contracting book and just highlight this deal.
Thanks. And so it's we have 4 offtake agreements, 1 with a trading company and 3 with utilities. So this will be our 3rd utility one. As far as the size of it, I think in the press release it says 650,000 pounds of U3O8 over a period of 4 years, market-based pricing with price collars. Now, I can't go into details as to the level of those price collars, but I can tell you that the floor is very close to where the spot market is today, and the ceiling is well above today's spot market. I feel confident these are going to be contracts that are going to be good for our shareholders and for the operations going forward. I think what it shows is that, well, I'll tell you, get a little sense of it. So if you go back and look at the price of uranium, back when we announced our first contract, I think we're still in the low 30s or maybe mid 30s. The second contract comes through. I'm talking about the utility contracts. The trading company one, which was through UG, Uranga Shell Shaft USA, is a legacy that came over from when we acquired the Westwater assets. So that was kind of one-off type of contract as an offtake agreement. But the utility ones, if you were to know the details of our market-related and the price collars, you'll see they've been advancing almost every time up to be more consistent where the current market conditions are. So what we're seeing is a strengthening. The other thing that I'm very confident about is that we're going to see more utility contracting come into place soon. What is holding up the timing of that is what happens with Russia and what happens with the Russian supply. That's the elephant in the room when it comes to making those type of assessments. Because frankly, the Russians can, there was a letter that the Commerce Department put out several years back that talked about the Russians conducting price suppression. And that price suppression is what is a concern for me, but also is a concern for the utilities. But I think if the U.S. government continues moving as we are with some of the legislation that's being proposed, if they can get the funding to build out domestic enrichment, nuclear fuel supply chain that's more robust than what we have right now, I think that you'll see more and more utility buying from people like us rather than relying on the Russians or the Kazakhs to supply, simply because we have you can't beat our secure supply line, which is North America.
Absolutely good points. You guys are building a nice book that I think any clients that come along will have to seriously consider what you guys are offering. So it's really coming together really nicely, and a contract book that's well constructed, well thought out, and with you as the leader on that side, allocating the production profile as it comes along here. And of course, leaving that upside because you've actually done the work with respect to uranium, and you actually have a really good idea among some CEOs out there that have no clue where this market is going to head in terms of incentive pricing for the global incentive price, if you look at that, and then also what dynamics could bring that price even higher. And so I think it's a great book that's coming together here, and appreciate the hard work on that. Just a few other things here. Let's wrap up. There is a new company that the enCore team has helped work along to bring to the market by placing and selling some assets into this new company. It's called Nuclear Fuels Incorporated. Talk about the importance of this company and also the exploration arm, if you will, of enCore, and how it really fits into the strategy for enCore.
First of all, it's an opportunity to be able to get us to allow us to monetize some of our non-core assets, and that'd be, as we stated, some properties in Arizona as well as in Wyoming we've acquired. As you would expect, with a company like ours brought together through M&A and also the way enCore holdings were prior to 2020 when we brought in the Westwater assets. We have quite a few properties that may or may not fit our strategy of U.S.-based in situ recovery production. So we have to look at how we're going to be able to do it. Some may be on small deposits, some may have large potential historical resources that need to be drilled out. And how do you manage that and balance it with the time? So there's a couple of ways we could do it. We could find a willing buyer to go buy them off us, or we could come up with structure, work to support a structure that would be able to allow us, enCore as a company, to be able to leverage the various strengths either company has. So in the case of Nuclear Fuels Inc., we're selling them properties that we've acquired to have known and substantial historical mineral resources that need to be drilled out. It's going to be almost a greenfield exploration program. Lots of sheep pasture to go through. Do we spend our time doing that, or does somebody else do that on our behalf? What we've done is we've sold these properties. We get a piece of the company, I think something south of 20%, and we get a couple of board seats on it, so we get the ability to drive some of the strategy behind it. But it can go out and raise money and develop these properties into mineral assets. And if they do get to a point where they're ready to be turned into a production project, we retain the right to claw back 51% of the ownership of that project. Obviously, we have to pay to claw it back, but there's a structure to claw it back. And that allows us to leverage off of any success that Nuclear Fuels Inc. has in developing. It's a good strategy. Right now, the ability to get value for non-core assets is somewhat, depending on who's doing the buying and everything, but it's not like it was back in the last run up in the early 2000s or mid 2000s when there were 400 or 500 companies with uranium in their name on the venture exchange. We still haven't gotten to that point and so we want to make sure that we monetize the value even from our non-core properties to protect our shareholder value. And we see this as one mechanism to do that.
That's right on. This is nothing new, really. Let's see. Deep Yellow is the one that was spun out as an exploration arm of Paladin. ISO Energy is another one more recently coming out of NextGen.
Mm-hmm.
The right way, I think, to go about it. And again, if the market's not going to necessarily yield some of the pricing you want for some of these assets, which you guys see internally as being much more valuable than the buyer maybe doesn't see that, I think it's a great way to go about this. So I appreciate you just highlighting that briefly. Paul, as CEO, enCore, the team there, Bill, bringing you on a number of years back, a lot of progress has been made. How pleased are you with the progress? Are you enjoying the work there? And just give the audience some color on what key milestones that you see are left to come.
If the audience has been following our activities, you'll wonder if I've had any time to sit back and enjoy the successes we've seen. It's been a whirlwind. It's been exciting. It's been fun. We've had a lot of things hit the ground all at once. Successes, all of them. Couldn't have done it without Bill he's a big piece of this. And then we've got a good, strong board who keeps us in line and going the right direction. But we couldn't be where we're at now also if we didn't have a good, solid technical team. And I've been working hard to find experienced veterans, particularly ones that are experienced with our projects, to bring them in and come work for us. And I've been successfully able to find them through old contacts and everything else. And we continue to locate people that are key, experienced people because and I'm looking for even younger people now because they're going to be the folks that succeed me and my senior team to run this company to the future. With the success we're doing, we're just not sitting back on our hands. We're going to go into production, but we're going to expand our production, but also going to be expanding our talent pool at the same time to be able to make this all sustainable. I could tell you there'll be a point where I won't be able to keep up with everything going on every day. Right now, it's already a pretty challenging day-to-day exercise, but as we get bigger and we start doing more, we'll need a good, solid team. That's what I'm really proud of building so far, and I expect to continue expanding the bench strength that we have.
It's quite a juggle. Definitely find some time for yourself and take it easy and recoup and get a little bit of rest. Because certainly if there's a person out there that deserves it, it definitely is you. I can think of a number of other CEOs in this sector that don't deserve it. But that's for another conversation. Well, Paul, let's leave it there for now. For potential investors who are listening in, the company has a market capitalization of about 276 million US dollars at this stage in the market and at this point in the enCore progress. Why should investors consider the company now?
We're still on the early phases. I mean, if one were to use a baseball analogy, we still haven't gone out of the third inning yet, and we still got a lot of baseball to play. And I think there's a lot of opportunities going ahead. I think that all the pieces, the long-term value that you're going to see coming out of the uranium side is going to be real. I know that we've seen kind of a doldrums around $50 a pound, but I can tell you 2 years ago we would have been screaming and joy to hear 50 over the $30 a pound we were looking at back then. So I think that we're seeing continuing expanding market expectations coming out of the market, but it doesn't change the thesis. Is that we're still in a we're going to be very much in a demand-driven market, whether it's through existing fleets, power up rates, which we're already seeing as a result of government policies, longer-term operations of nuclear power plants, the restarts of plants in Japan, new plants being built in China and Asia and India, within China, India, and all over Asia, that is. It's hard not to see that the demand is going to continue to increase. And we keep hearing every day coming out of different utilities in the United States about adding these small modular reactors to be able to supplement their and replace their coal generation fossil fuel, at least displace quite a bit of it. They're announcing it publicly. So that's increased demand. Got to get the uranium from somewhere. And again, like I said earlier, there's no secure supply line in North America. The U.S. and Texas are a great place to start.
Well said, Paul. I appreciate that. And what's the best way for investors and others to reach out to the company?
On our website at www.encoreuranium.com. Email address is info@encoreuranium.com. Our general phone number to our office, 361-239-5449. And we'll do our best to get back to you as soon as possible.
Paul, I appreciate it. Thank you for the time today, sir, and we'll be in touch soon. Thank you.
Have a great one. Thank you. Goodbye.